Hi everyone, welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence. We know that the brutal war in Ukraine, along with the COVID pandemic, have contributed to slow down the global economic growth, leading to inflation. Consequently, stocks of major companies are crashing as investors drive a selling spree in fear of losing out more. But did you know that there is a giant e-commerce company that has crashed more than 77% in the past year alone? In today's video, we'll talk about the rise and fall of Shopify, how it rose to fame, how the current economic downturn has taken a toll on the company, and whether or not it's worth investing in Shopify. Before we start, if you're interested in this topic, please smash that like button so others can find this video as well. Let's start with, what is Shopify? We're sure most of you may have heard of Shopify, but if not, no worries because we've got you covered. Shopify is an all-in-one e-commerce platform that allows people across the world to start, run, and grow businesses virtually. The Canadian e-commerce platform, headquartered in Ottawa, was co-founded in 2004 by billionaire Tobias Lüdke, who serves as the CEO, as well as Daniel Weinand and Scott Lake. Tobias came up with the idea of Shopify after he felt dissatisfied with the existing e-commerce platform solutions while trying to sell snowboards on the internet. The Shopify model is quite simple to understand, and just about anyone who has an interest in scaling their business to reach the global market can take advantage of it. For instance, if you're in the branding industry, chances are that you're owning a physical store somewhere and serving clients from that city or neighboring cities. But thanks to Shopify, you no longer need to serve people from your local cities or own a physical store or have to buy and store inventory yourself. All you need to get started is to open a virtual store on Shopify, make merch designs, and drive traffic. Now, anytime someone buys from your store, Shopify handles the rest, from printing, packaging, to shipping. You can run a physical store along with Shopify's store. Shopify is trusted by millions of people globally as it keeps to its mission of helping millions achieve independence by making it easier for them to start, run, and grow businesses. The rise of Shopify. But how did a simple idea of establishing an e-commerce platform where businesses could open virtual stores grow to become such a big deal? Well, Shopify almost immediately started recording a steady growth from the time it was launched. In fact, in just 3 years of going public in 2015, the company had grown 10 times with a gross merchandise volume of over $7 billion and over 150,000 stores operating on the platform, all thanks to the smart strategies employed by the founders. And in just a decade since it was launched, Shopify had grown tremendously to become among the leading e-commerce stores in the world. But it was until the pandemic hit the world that Shopify recorded a peak in valuation. In 2020, Shopify's quarterly revenue almost doubled as the company benefited from the e-commerce boom spurred by the COVID-19 pandemic. New businesses signing up to use the platform led to the number of stores crossing the million mark, even as revenue surged to $700 million in the second quarter of 2020. But that was just the peak of the iceberg. In 2021, as the world began to return to normalcy, more people went online to do shopping, driving Shopify's valuation to an all-time high of over $200 billion. In fact, in 2021, the company recorded a third-quarter profit of nearly $1.15 billion. But despite having recorded stellar performance in the recent past, its latest estimates are worrisome. Shockingly, Shopify's stock plunged from an all-time high of $169 with a market cap of over $200 billion in November 2021 to trade at a low of $32 in July 2022, with a meager market cap of $41 billion. The fall of Shopify. So what caused this major crash in a company that was doing perfectly well in 2021? There are multiple reasons that have led to the crash in company's stock price. Some of the key reasons are, number one, inflation. It has played a big role in the plunging of Shopify's stock, even as consumers got stretched by the higher prices of gas and basic commodities. Number two, recession fears. The company's growth depends on adding subscriptions, having existing users upgrade to a more expensive subscription, and supporting users' businesses so that they adopt more merchant solutions. If there is a recession or an economic slowdown, that could mean fewer people launch new businesses, or existing customers shut down and cancel their subscriptions. At the very least, it would probably mean most merchants on its platform are seeing little to no growth. Number 3. Competition. Shopify has grown to become the second most dominant e-commerce player behind Amazon. But new competition from Amazon with deep pockets could take a chunk out of Shopify's earnings or simply slow down its growth. So, does that mark the end of Shopify? Well, despite having a stock plunge, a majority of analysts and investors are bullish on Shopify. They believe that Shopify has strong fundamentals which will help it to recover from the crash. Some of the strong fundamentals include a huge number of third-party app developers who have created over 8,000 Shopify apps, over 1 million merchants operating stores on the platform, a solid balance sheet with over $12 billion in cash and less than $1 billion in debt, among others. Now, that means that the current crash is a perfect opportunity for wise Shopify investors to add to their positions. So, there you have it, guys. Hope you enjoyed watching this video. Make sure to smash the like button. It really helps others in finding this video, and subscribe for more videos. Thanks for watching, and we'll see you in the next one.